for the Nifty, but the mid-cap index is the one that takes your breath away, up 60 points now as we speak, 0.33%. A lot of these financials, they're doing fairly well. So we have Shrey Infra, which has suddenly shot up about 6.5% from the lows, was trading in the red earlier, has now moved into the green, and how with a 4% move, there you have it on Shrey Infra. Along with that, we have Capital First and IDFC Bank, both of them moving to the high point of the day. Remember, yesterday the deal completion was announced, so it is Capital First, IDFC Bank together, and we had Mr. Vaidyanathan speak yesterday as well. Was pretty sanguine on the retail share for the bank. At the same time, the street is a little worried about the return on equity for them, but both those stocks moving higher, finding some favor with investors. But as we enter 2019, it's a crucial year for India, considering we have the general elections. So what exactly are the concerns and the triggers? Here's some opinion coming in from EM guru Mark Mobius.
Definitely, there'd be a real problem if you see the reforms that Modi has introduced disposed of. That would be a real backward step. Now, I believe that the Congress Party would not do that. They probably continue, but populist measures are not a good medicine for the economy. What is concerning to us is the political talk about the farmers' loan forgiveness, which is palliative. Of course, it's very good for the farmers for the short term, but for the long term, it's not a very good move, I believe, because it means that you're not looking at the basic problems, which is infrastructure and other aspects which will help the farmers in the long run. In the short term, of course, the loan forgiveness helps the economy, and then you get a boost to growth. With this loan forgiveness, of course, you're going to see consumption skyrocket, and you're going to see many, many opportunities in the consumer area. The Fed is going to continue with this disposal of all these assets that assets, I should say, that they've gathered over these few years, and so we can expect further rate hikes, but it'll be at a much slower pace, in my view, particularly since he used the word uncertainty, and since he said that there's a possibility of a slowdown in the U.S. economies. However, the uncertainty, the general uncertainty, gives people pause to pour too much money into emerging markets. We've seen some money coming in, but not to the extent that we would expect, given the very good growth outlook for emerging markets.
All right, so there's an ongoing debate on the farmers' loan waiver and how political it is and how the economics really work out. So Mark Mobius clearly saying that in the short run, it may have the right impact for the government of those states, but definitely in the long run, it could have adverse impact. So that's a big debate point. Now, let's do a check on one of the counters which has been on our radar, Jet Airways, because of many, many developments. And today, of course, 1.7% up, but also because crude oil prices have been helping the aviation sector. But one of the many important board mates is lined up today for Jet Airways for more fund infusion into this particular company. And also, on the other hand, remember, they have been taking a lot of cost-effective measures to really get the operational performance of the company back in shape. And debt and the leverage concerns really loom large. So for that, Etihad is one of the partners there, a big investor. So those stocks are also going on at the moment. So taking stock of all the situation is what we gather from sources with direct knowledge. But one of the many important board mates is what we gather. So that's one counter on our radar. But remember that we have been looking back at the year 2018 and what has been the impact and the big really movers as far as the market as well as economy is concerned. Power sector. That is one of the stressed sectors, how it's performed and what are the takeaways for the next year. Anisha Jain tells us all about it.
Well, yes, as the power sector powered ahead this year, it made a lot of headlines, albeit for both good as well as bad reasons. Now, the 100% electrification drove up the demand and the power rates in the country, and as a result, the plant utilizations went up. Separately, to address the stress in the sector, a lot of policy initiatives were brought into effect this year. Now, let me break it down for you. First was the proud moment for the Prime Minister as well as the entire country as we achieved 100% electrification. Now that means that all villages in the country now have access to electricity. While access doesn't necessarily mean that every villager is using electricity, at least the nation has been mapped with power, and that picture should come up for you on the screen. Now this 100% electrification not only led to the increased spends on the last mile connectivity, but also drew up the demand for power. For the first time in almost half a decade, the electricity demand scaled up to double digits at 10%, raising the hopes that FY19 as a whole can see a demand growth of around 7%. Now, experts say that this uptick was led by, of course, the festive demand, but there was an uptick in consumption by industrial sector as well. As a result, the fall in the PLFs has been arrested. As you can see on the chart that will come up for you, even if the PLFs have not moved up materially, at least partly the fall has been arrested, and that is the positive this time around. Let's move ahead and talk about the other factors that come into play. It is in fact one of the let's move on and talk about more on it. It is in fact expected to move high in 2019 as far as PLFs goes. Moving on to the supply side, the peak supply deficit has declined from over 8% in 2013 to nearly 0% in 2018 now, suggesting that at least some bottlenecks with respect to supply have also been removed. Remember, the sector has faced several issues, right from coal shortage to lack of PPAs, and this has led to a stress of around 40 gigawatts in the sector. Now, out of this 40 gigawatts, 21 gigawatt is stressed due to lack of PPAs or the power purchase agreements from the discoms, and furthermore, we have 11 gigawatt that is stressed despite having the PPAs, with many plants not having adequate coal supply. Now, throughout this year, we have seen a lot of high-powered discussions and committees formed to solve this stress, and a lot of policy initiatives like Samadhan, IBC norms, Parivartan, Shakti, Saubhagya, they have all been taken. Even if the results have been slow and only 8 projects out of 34 stress have got resolved, at least it's a start, and the sector is looking at 2019 with a lot more hope and feasible solution.
All right, Anisha, but all was not good for the sector, right? There were many negatives as well. Can you take us through them?
Well, yes, there have been definite progress in the sector, but we are far from the end of the distress. The sector is stuck in the perpetual circle of lack of demand, coal shortage and overdue payments, as well as operational misses by the discoms. Now, even after an uptick in coal dispatches from Coal India, due to the rake unavailability and demand mismatch, a lot of the independent power producers as well as the public power plants faced a acute shortage of coal. For example, the coal inventory in the country at an aggregate level went as low as 7 days, and for a lot of power plants, it was at a critical level. Now, after many years, NTPC, like many other IPPs, had to actually resort to importing coal. In August 2018, the coal imports jumped up 28%. And there's more. One of the weakest links for the sector is actually the power distribution companies. While Uday reform was brought in to reform the discoms financially, it did not have the expected impact, as the All India AT&C losses in the first half of the year were at 22% compared to the target of 15 to 19%. Even at the company level, the problem of overdue payments has not been dealt with. For almost all the companies, the outstanding dues have actually gone up on a year-on-year basis. The problem being even more stark for the independent power producers versus the PSUs. Now, as per experts, what also has impacted the power sector over the long term is the lack of continuity in policy initiatives. From sudden push to renewable to changes in the policies and tariffs, the sector faces a lot of uncertainty, and this leads to low business confidence. Very recently, we saw how the wind power tariffs led to disruption of the industry plus surrender of a few PPAs. And all this has led to increased risk for the lenders, and hence the incremental lending to the sector has declined. And while there has been some resolution, 8 out of 34 projects, the process is long. For example, the applicability of RBI's February 12 circular to the power companies is still being contested in the Supreme Court. So going forward, the fortunes of the sector will depend on 2 critical issues. First up, the shortage of coal, and the second being the high AT&C losses from the discoms that definitely need to come down. Back to you guys.
All right, Anisha, thanks a lot for that. Going forward, the fortunes of the sector will depend on a couple of things that you just spoke about, but looks like the fortunes of PCA banks might just change, because we're getting some news coming in from the government officials that the government recap for PCA banks, or the banks under the prompt corrective action norms, will help them exit the framework without actually tweaking norms. Well, Lata joins us now. Lata, it's a nice little bypass to get the banks out of the PCA norms?
It's a very positive bypassing of this, because that would mean that almost at the gunpoint, the central bank is being asked to dilute norms of banking regulation at a time and in a sector where weakness is staring at you in the face, where gross NPAs are double digits for all the PCA banks and net NPAs are at single digits but high single digits for all the PCA banks as well. A couple of them are extremely short on capital, like Allahabad Bank and Dena Bank. And in the face of this, with the advent of a new governor and another previous governor resigning in a huff, if you were to dilute the norms, it would have clearly looked askance. So this is a very sensible step if what the government official says indeed happens. What it looks to me is that the recapitalization will be done very soon, in the next 1 week or so. At any rate, the money will be transferred, or rather the bonds will be transferred to the banks before December 31, so that it reflects in the Q3 numbers. Right. When the Q3 results are announced, the CET1, that is the common equity tier 1 capital of the banks, as well as the overall capital adequacy ratio, what you call CAR, are both above the threshold limits. The CET1 has to be above 7 and overall capital adequacy at 9. That will be there reflected in the numbers. In addition, since some of them are moving towards lower net NPAs, like, say Bank of India or Oriental Bank of Commerce and such like, you would immediately have the Reserve Bank on firm ground to be able to pull them out of PCA. So my sense is this will be the sequence of events. Don't expect banks, RBI to meet and put a press release suddenly saying these 4 banks are out of PCA. Probably the sequence of events. I'm entirely going by this statement that Sapna has broken for us. The sequence would be they will capitalize very soon in the next week or so. At any rate, before December 31, it will be reflected in the Q3 numbers. The results may be advanced, in January itself and will not be announced, in the second half of the results season, early half of the results season. Looking at those numbers, Reserve Bank will be comfortable to pull these banks out of PCA, at least, 3 or 4 banks. And that, in a way, will save both the reputation of the banking sector and of the banking regulator.
All right. So, Lata, stay on with us. We also have Sapna Das. Finally, we have got her on the line. Sapna, give us more details on this. This is a very, very important step for recapitalizing the banks.
Well, so as we have highlighted, the Union Finance Minister will be briefing us on the same sometime towards the latter part of the day. And we are expecting some contours to be announced on that front, in the sense that, how will the additional recap help? And if any of the banks that we can talk about. The understanding so far is that probably, government will go ahead with a recapitalization plan now, sometime starting as early as next week. As I had already indicated earlier also, there's an existing budget as well as you have an additionality now. So if you look at the overall envelope, 83,000 crores worth of PSB recap bonds are waiting to be infused. This is a big, big, big number that we are talking about. So no reason why the lending activity should be an issue, or even the names that you were mentioning about in terms of those banks, particularly under the PCA framework. We are already aware about the fact that at least for Allahabad Bank and Bank of India, the NNPA levels are below 8%. So that's a very good indicator. If you look at some more banks, probably, there the risk-weighted assets have already come down. In fact, all the PCA banks put together, what we are given to understand is that the RWA has fallen by as much as 15%. Now, this is a big capital relief for that sector, right? And plus, you have this additionality coming in. So for all you know, this may signal probably an early exit, at least for 1 or 2 players from the framework, without waiting for the norms to be tweaked, because that matter is already with the Board for Financial Supervision, as in how those recommendations come, because that will be a sector overall pitch as well as an individual pitch. So we have to wait and watch for that as well. So that will be an additional help. But in the meanwhile, the government is leaving no stone unturned to make sure that the banking activity is smooth, seamless, as well as those banks which are under stress right now, they get that kind of capital support. Plus, this will also help some of the banks to go ahead and do their market raisings. Like 58,000 crores was the original target that had been set out when when this big recap plan had been announced in October 2017. So at that point in time, 58,000 crores was a number that was given. Now, how much the banks have been able to meet, probably we'll have an idea sometime today evening on that. Some of them are already going ahead. For example, SBI's fundraising plans have already been cleared by the board. So most likely some of the big banks like SBI may not require this kind of recap support from the government, but the remaining may. So it's a combination of many things, market raising as well as recap coming in from government.
I'll just put that arithmetic. Of that 58,000 crore, only 10,000 crore has been raised. So technically speaking, this extra 43,000 crore merely brings the number to 2.11 lakh crore. Of course, as Sapna says, if SBI goes and does a giant raising, then you can say that is extra. But as of now, the October 2017 number has just been met. Whatever was the shortfall which banks ought have raised and did not raise, they were supposed to raise 58,000 crore. They have managed to raise maybe around 10-15,000 crore. So that balance is what is coming as recap bonds.
That has been bridged. The gap has been bridged. But
and it will be, I think, judiciously distributed, partly for healthy banks like BOB who are taking over weaker banks so that they can grow faster, and partly for these PCA banks which have the best chance of coming out.
So we should look at rupee as well. That is showing some strength at the moment. But Lata, I wanted to ask you one question which Sapna was harping at, that some of the banks may come out of PCA on their own because of recapitalization. So that is a big possibility without tweaking the norms.
No, I think now it's almost a given that they may not tweak the norms at all.
Yes.
Because if you are going to get 4 or 5 banks out because they meet the capital norms, and, you know, at the end of the... my sense is they won't do it before the third quarter numbers. I mean, you're 10 days away, and if the banks can announce the results by, say, 15th of January, it's just about 3 weeks away, you know. You could wait for that, and if they show even... the delta is towards lower net NPAs. Even if they don't go below that 6% mark, it might seem as a very good effort. Allahabad Bank in particular, since Sapna mentioned, Allahabad Bank has shown a lower and lower net NPA, but they are seriously short on capital. They are short even below the CET norm. So there, a 4,000 crore capital infusion by the government will qualify them more easily out of PCA. But my sense is the RBI will wait to see the numbers. Even if they get the capital, many of them don't qualify on the net NPA number, which they may on their own qualify if the Q3 results are announced. So chances are they could wait. But yes, I mean, it's...
But from the company's point of view now, Lata, this was from the bank's point of view very quickly. Some of the companies are finding it difficult. If these PCA banks have an exposure to them, they can't even restructure the loans. They can't get additional money. And one of the private equity firms, an NBFC, had said that they don't get NOC from those PCA companies. So these companies are restricted. Is that going to lift up anytime soon till this PCA, they don't come out of the PCA?
That will be very case by case. That will be very case by case. A lot of banks, even when they have capital, don't give NOC for other reasons. Because they don't want to increase exposure to a company or to a sector, or because they are not benefiting by giving the NOC. I know of banks who don't agree to a restructuring package because they are lower down in the food chain. So why should I give an NOC? I'm not getting. So it's just a bargaining tool to get more out of the restructuring. That's a different issue, but we were talking about the rupee getting stronger. It's certainly one of the stronger performing currencies. The dollar has weakened by 1/3%, 0.36, but the rupee has strengthened by 0.5%. So, I mean, just by that you can say it's an outperform.
All right, thanks a lot for that, Lata. We've gone on an extended lunch if you must.